Good morning and welcome to Seattle's Real Estate Podcast. I'm your host, Dan Edwards, managing broker for the Seattle Real Estate team. And yeah, we're a little early today. It's Wednesday, October 2nd, and we are coming to you live, not only from Seattle, but our good friend Tucker Maxwell will be joining us from Nashville, Tennessee. So we're doing this a little early so we can jump in, get this podcast to you. We've got some great topics today. We're going to talk about the benefits to first-time home buyers in this current market. I know that sounds weird. There's a lot of talk about housing not being affordable, and a lot of people are kind of priced out of the current housing market. But I've got some good news, and I've got some advice to those that are thinking about buying a home for the first time. We're also going to talk about the covenant loan program with Tucker Maxwell during the mortgage moment. So let's jump into our Real Talk segment. We want to talk about is some good news for first-time home buyers. There's a lot of different challenges that are being faced with affordability, especially here in the greater Seattle area, and interest rates are affecting that affordability. But I want to change the paradigm, change a little bit how a first-time home buyer thinks, because it may seem so overwhelming. It scares you away from an opportunity of a lifetime. Granted, you certainly do face some uphill battles, so I'm not going to discount that. But here are some tips and tricks on how to get you in to the real estate game, or real estate. What's the word? It's not a game. It's getting you into something so that you can recognize the benefits of home ownership. I think that's the better way to put it. So the number one thing you need to do is know your financial situation. It certainly is important to have a great credit score and save for a down payment. And also, most importantly, have an emergency fund. So if you are in this situation where you know your credit score is good, you know that you have some money saved up for a down payment, as little as 3%, and in some cases, no percent, because there are down payment assistance programs, up to 20%. So it definitely does depend on what your cash flow and your budget are going to be. And then most importantly, have an emergency fund. This is a great way to be prepared for what may happen in the event that there's a hardship at work, or an additional expense that you weren't aware of. Maybe the car goes a little sideways. Perhaps you have some unknown medical issues that might show up later. But putting yourself in position to be a homeowner, having those three things ready to go is going to go a long way to feeling more secure about making the move. Of course, number two is to get pre-approved. We've always talked that a lot of people they start kind of backwards. They go about looking at their homes, looking what they want, and they don't understand what they can afford. And in some cases, it may be more than they suspect. In other cases, it may be less. And so don't worry about, well, first off, find a great mortgage broker. We got one for you. Don't worry about that. But also, too, you want somebody that can give you the insights into the different loan types: FHA, VA, conventional, down payment assistance, covenant loans, all of those types of things. Is make sure that you speak with somebody that has experience, and go ahead and get it pre-approved. I think the biggest hurdles to most home buyers in this market is they don't really think about getting approved. They think, well, we'll just get it when the time is right. The truth is if you do this up front, it's going to demystify a lot of things and provide clarity to where you can live and what you can afford. So go ahead. It's not going to kill your credit score by getting pre-approved. It will only provide clarity and allow you to have a little bit more of a pathway to ownership. So go ahead and do that. Like I said, it's not going to hurt. And then finally, understand your budget. So understanding your budget does come down to ensuring that you have a clear understanding what the total costs may be. So if you don't get pre-approved, you're not going to know what your monthly payment is. You're not going to know what your tax deduction is. And you're not going to know if you maybe have to be funneled more towards a condo rather than a home, which adds additional homeowner expenses. You're also not going to know what insurance, utilities, maintenance costs. When you understand your budget, it's going to free you up for understanding the process. So number one, know your financial situation, get pre-approved, and understand your budget. Now, the key point I want to kind of hone in right now is a lot of folks out there have durable income. And durable income means they've been in a job for a long time. It's consistent. They have a contract. They're maybe a school teacher or they work from Boeing, but they've just been renters because they haven't decided to put down roots. And so a lot of times they're like, we want to live our lives. We're not necessarily sure that what we want to save a little bit more money before we purchase. And here's this is my like big aha, is you can't outsave appreciation. What does that mean? You can't outsave appreciation. So recently I was working with first-time home buyers and we were discussing their desire to get into a home. They knew it was a financial smart idea, but only had about $10,000 saved up. I asked them how much they were currently paying for rent, and I walked them through a scenario of today's market, and I'd like to share that scenario with you now. So I'm going to go ahead and put this onto our screen. I hope you can see this, but if not, just kind of follow me. And what I did is I decided to do an evaluation period of 3 years. And the evaluation period is really based on buying and then selling. So it's going to give you a couple of different angles. The first one is, actually, I probably need to change their tax rate because I know what they made. It's a little higher than the 25%. Their monthly rent is $300. They're paying renters insurance of $200. And I put an annual increase of 5%. Now, I will say that most trends point between 5 and 10% in the greater Seattle area. And it depends on how hot the market is, how cool the market is. All signs point towards a fairly robust rental market, meaning there's not a lot of vacancy out there. And those that want to live in better properties, the landlord is going to continue to raise rent based on kind of the economy and inflation, right? It's going to cost them a little bit more money to pay some of the things that they have to pay. And I always tell any of my landlords that you should raise your rent every renew of every contract by 5 to 10%. That's it's better than waiting 5 years and then having to raise it excessively. Okay, so I'm going to put 5 because I want to be on the conservative basis. Then in the purchase price, I just said, hey, based on what you guys are looking for, let's say $500,000 is going to be your purchase price, and they have saved up $10,000 right now. And their thought was, let's go ahead and wait until next year so we can save up another $10,000, and then we'll have $20,000 to put down on that $500,000 house. Now, the other thing I did is I put a 5% appreciation rate. Now, over the last probably 6 to 8 years, our appreciation has been in the double digits, but I don't want to overpromise, and I'm not here to just sell somebody on buying. So I went very conservative, and I said 5%. Now, this selling cost rate is at the end of the 3-year term, they're going to sell the property, right? So finding out what their actual net value, because the idea here with this first-time home buyer is to get them into something for the next couple of years and then get them into what they really want a few years later. Now, if it's going to cost them a bunch of money to sell that property and buy the next one, right, it's a loss, right? So we want to factor that into it. So what I did is, I should probably put monthly HOA dues, and I'll just go ahead and put $400 a month here because I just want to be fair. I just want this to look fair, right? So essentially, we're looking at a $490 loan amount, and I put 6.5% is our current interest rates. Let's see, where did that go? It's in here somewhere. I know that. 500 annual monthly maintenance HOAs. It's down here, 6.5%. I was tracking. Okay. And then I can put a origination fee of 1% and guesstimate the rest. Now, on the bottom right-hand corner, it says here, and I'll go ahead and blow this up. It says $30,000 is the benefits of buying, and I'll go ahead and go here to print. So total rent cost for 3 years is $114,000. That's a rent cost. There's no tax deduction whatsoever. It's 100% expense. It's $3,000 a month. Out the door, you're not seeing it back. Total cost of home ownership, that boils down to, I think it goes less the cost of selling. So net cost of buying is 82,000. So our buying will save you approximately $30,000 in rent rather than renting over the next 3 years. So that's $10,000. In the meantime, the individual can also save money, but that's $10,000 a year. So how much work would it take to save $10,000 a year and you don't have an asset that's appreciating? And if all things are equal and appreciation is higher than 5% and they're able to save more, they're able to have even much more of a nest egg that they can turn around and put into a future house. So essentially, you can see that you can't outsave the appreciation. If I were even to change this appreciation rate to, let's say, 7%, that moves it up. That actually doubles. So if our appreciation is just 2 points higher annually, and that's going to double. So saving $20,000 or earning $20,000 in equity. So again, in the end of the day, finding out if buying or selling is the right thing for you does matter. I'd love to sit down with you, go over these numbers and how they work for you and put you in a position to maximize the power of appreciation. And that's really what we have here in the Northwest is the power of appreciation, a place that you can call your own, a wall that you can take down, a wall you can paint, you can build whatever you want on it. Depends if you're in a homeowners association, there are some rules, but that really is the power of why a first-time home buyer has to figure out a way to get in to home ownership because it means so much. All right. So that's your Real Talk segment for today. Let's head out to a short commercial break. We'll bring our good friend live from Nashville to talk about an interesting loan program you need to know about. We'll be back after this short commercial break.
Are you wearing too many hats in your small business? Finding yourself wondering where the time went? Do you ever get frustrated with technology that should just work? Then you need Nerds to Go, America's small business IT department. 425-800-NERD. At Nerds to Go, we provide friendly, professional, and reasonably priced solutions for small business owners. From network troubleshooting to hardware repair or training, let Nerds to Go be your IT department. Call Nerds to Go today. We'll come to you. 425-800-NERD. That's 425-800-NERD.
Well, welcome to the show live. Oh, look at that wonderful music scene. You must be there in Austin. No, I understand that you're in a hotel, so that this makes sense. This is a beautiful hotel. Welcome to the show. Hey, so Tucker, what did you think of my Real Talk segment there?
I loved it. I talk to buyers about that all the time. You know, the really important thing there is the sunk cost of renting. There's literally no return. Yes, you have a roof over your head, but there's no return. And so even with minimal down payment, it makes sense to buy.
Yeah. And that was just the worst case scenario, low down payment. If you have even more of a down payment, it's going to look better. So we can do those scenarios at any time. All right. So today we are talking about something a little bit different, something I hadn't heard of before. Why don't we kind of just jump right in?
Yeah. So to start with, in Washington, we have the Washington State Housing Finance Commission. And really their job is to create homeownership opportunities for buyers across the state. So these programs are available all across Washington, and it provides down payment assistance. And so depending on who you are, what your income is, and so forth, there is a wide variety of programs that the commission offers to help first-time home buyers and, buyers that have owned in the past buy with little money out of pocket. And in July, they most recently released their newest program, and it's the Covenant Homeownership Program. And this is really exciting. So it came out of a study that was done in 2023 from the leadership at the Housing Development Consortium, the Black Home Initiative, multiple of our state representatives and senators, and the Washington State Legislature passed the Covenant Homeownership Act. And this was a bipartisan policy. And it basically proved that in Washington State, we had discriminated within homeownership certain classes of people going back, many, many years ago. And so what they did is they obtained funding to be able to provide homeownership opportunities to people that are in the lineage or the family of these people that were discriminated many, many years ago. So what it does is it covers a full 20% down payment and closing costs. So back to your analysis that you just did, 20% down payment, no closing costs, payments are significantly reduced. And it really helps people buy at a higher purchase price in our high priced housing market. And to qualify, here's kind of the key thing. There are some specific qualifications for this program. First is that you have to earn less than 100% of the area median income. So there is an income cap on the program. They also, for this specific program, you have to be a first-time home buyer. And then you have to have had, the home buyer has to have had a family member. So think parent, grandparent that lived in Washington State prior to April.
Are you hearing?
Yeah.
Yeah, I just switched over my headphones. It's like timing, like right when you're on there. So, wow. Okay, you said that they have to have somebody that lived in the state prior to 1968.
Correct. Yep. So parent, grandparent that lived in Washington before April of 1968, and they have to have been a part of one of these classes that was proven that they were discriminated against for homeownership. So they have to have been Black, Hispanic, Native American, Alaskan Native, I'm reading it off the list here, Native Hawaiian or Pacific Islander, Korean or Asian Indian, and then they expand upon those for Samoan, Chamorro, Tongan, Fijian, and Marshallese people. So basically, if you had a grandparent or a parent that lived here, you get your full down payment covered with a 0% interest loan. So it's a little mini loan. It covers a full 20%, so you don't have mortgage insurance and all of your closing costs, and you don't pay back the money until you sell the home in the future.
So basically just sits there, but it does get paid off when it doesn't matter where you purchase?
Nope, anywhere in the state of Washington.
And then you said their income has to be below 100% of the median?
Correct. Yep. So it's going to be specific to the area that they're looking in. So we'll need to run that number, but yeah, roughly about 113,000.
Is it King County? Is it King County?
Do
they break it up by county, city, or state?
It's census tract, actually. So
okay.
Within King County, there's multiple, but kind of think about 113,000 right now is I believe roughly the average 100% area median income across the state. Some locations are going to be much lower than that, and then of course your Bellevue locations and so forth might be a little bit higher than that.
So they're roughly, what does that give them a qualification for? Like if your median home income is 100,000, right? Because that's going to be below the 113, then that's going to put them in somewhere between $400,000 and $600,000 purchase price.
Yeah, exactly. So it's going to depend on taxes and HOA dues as well, but really it's going to stretch their qualifications because of the 20% down and no mortgage insurance. It's going to keep that payment lower. So it's going to allow them to stretch that purchase price up higher than if they had mortgage insurance or had a much lower down payment.
Yeah, I think the big deal here is that you're borrowing only 80% of the value. So you have instant equity, and it does put you in a better light with a monthly payment. So how does somebody find out if they do? Like, what is the process of finding out if they do go through that, qualify for that?
Yeah, so the best thing to do would be to jump on the Washington State Housing Finance Commission website just to read about the program. It has a list of eligibility requirements, but then talk to a lender that participates in these programs and possibly teaches the class. There is a homebuyer education component to it as well that you'll have to satisfy. So going to one of those classes, they'll talk about these programs along with other programs. So again, to your point in your Real Talk segment, evaluating multiple options. This is just one of many that they might qualify for. And then also they should do some digging into, can they document that they have this family member living in Washington prior to April of 1968? And also the ethnicity of this individual. So you got to think of like marriage certificates, birth certificates, draft cards. I just had one that we qualified. They actually had a census snippet that they had had in their family documents that showed when they moved here and their race and everything, and it documented that that individual was their grandmother and had lived here prior to 1968. So
awesome. Well, cool. Thank you for bringing that. That's I think it's very important. Again, and it goes back to just getting into the ownership opportunity. The opportunity of owning a home leads to stuff, because like now you're not having to save up 20%, but you're going to continue to get the appreciation on the 100% of the home's value. So if that's your first step of getting into something, then your next step, whether it's be 3 years or 5 years from now, could be that much more. So really it's about locking in your purchase, your monthly mortgage. And, one of the beauties about doing something now versus waiting is, again, you can save appreciation. And at the end of the day, the benefits to you are being able to continue to grow in your net worth. So thanks for coming up with that program. Now, what are you up to this week?
Yes, I'm in Nashville this week. I'm at the Elevate Coaches Academy. So we coach loan officers from around the country within Guild Mortgage, and we're here sharpening our axes and coming up with coaching materials and information for the next year of coaching.
Well, hey, I want to bring our watchers' attention to some things that are going on. Let me see if I can switch to this view. I'm going to try this. I don't know what happens here. Boom. Okay. So some of you may have heard there was a hurricane that hit Florida. One of the biggest repercussions was when it went inland, destroyed many cities in the kind of center of the Southeast. And I just want to put this out here for anybody watching, is that Keller Williams has an organization. It's a 503c called KW Cares, and it is designed specifically for aid for real estate agents, and their communities. So we're asking everybody that has the ability to consider donating. These are, we've got the Red Cross, we've got a lot of, government organizations, which if you feel, compelled to donate there, that's great. This is specifically for agents and their families. So if you can imagine a neighborhood is gone, they're not going to be having any income for the foreseeable future because there are no homes to sell. I'm trying to think of, Florida had some cities just disappeared. I posted something on Instagram, and any amount helps. Our office here is trying to raise $4,000. We're also coordinating to get some trucks of water delivered to the Asheville area and surrounding cities. It's definitely something that is unprecedented. I believe the last time something like this happened was the early 1900s, where some of these towns were just wiped off the face of the earth. So scan this QR code. You can donate directly. And we just, our hearts go out to the families out there. I had an opportunity to go demuck some homes back when the hurricane in Houston. I can never keep track of their names and stuff like that, but it's a mess. It's a total mess, and it will take them months, if not years. Some of these places may never recover, but that's something that we gotta. Those of us here in the Northwest, we whine and complain about our rain, but I got to tell you, when half of the mountain comes sliding down because of the rain, that's a lot of rain. So, yeah. All right. Well, thank you so much for the flexibility getting this podcast done. And everybody, if you want more information, you can reach out to Tucker or myself for getting into the housing market. Thank you for watching, and have a wonderful week. And